There you go. Influence. Yeah. Oh, yeah. Credence. Hey guys. I'm a sinner. I want you to love me. All right, all right. Good morning. And as always, I got to fix this mic. So give me 2 minutes. Not even 2 minutes, y'all. Give me a second here. Give me a second. Which mic is feeding back? Boom, boom, boom. There it is. All right. There's always a solution. And I actually need to do one more thing real quick that I didn't do. And we are on default, which is a beautiful thing. All right, y'all. Good morning.
Good morning, Steve.
Welcome to R&B Talk. Steve Gooseby, Rich Sports. And we got Boss Lady News up in here. Got a great show for y'all this morning. We're going to be talking about how you should be putting your money to work, right? We're going to really dig into that today. We're going to talk about insurance policies, stocks, a little bit of crypto. We're going to get into all of that because, you know, one of the things I could tell you is too bad I learned it later in life as opposed to when I was 18 because they don't teach us stuff in school. But we got to learn to make our money work for us instead of we working for the money.
That's right.
Which is what most of us do. But before we get into all that, let's talk about what's going on in the world today. Dubai is being bombed due to the war that's going on with the U.S. and Iran. What are your thoughts about that? And I gotta say, like, I have a trip that's planned in April.
Don't forget Israel. Don't forget Israel, Steve.
Right. Supposed to be going to this convention. And I ain't going out there. Mm-hmm. I ain't gonna do it. And believe it or not, you know, I've thought about living outside of the country, right?
100%.
And Dubai is one of those places I thought about. You know, I thought it would be a great place to live, but with those bombs going off, no siree. Ain't gonna happen, man. But what are your thoughts, Rich, about what's going on in the world today, man?
This is a very critical time right now. If you are watching what's going on, the impact it's having on the financial markets, the price of gas have already went up. I mean, I filled up my tank last night from earlier on the weekend, and it already jumped up like 50 cents. And they expect gas prices to continue raising up. So what's going on? I mean, even like with Iran right now, there's a passageway over there that controls about 20% of the world's oil flow.
Right.
And if Iran decides to cut that off, that would definitely affect the markets all over the place.
Mm-hmm. Mm. What do you think, Boss Lady News?
Well, I, for one, I'm always thinking about what's the benefit of things, right? Like, what's the silver lining that we all can kind of consider? And when you are into stock, you're into investing. I mean, unfortunately, even with disaster and with bombing, Dubai has always been a very expensive, wealthy place to go visit,
right?
Place to start your business, place to live. And I, for one, I still would like to be able to do that. Dubai is one of the richest countries. It typically is one of the safest countries.
Right.
And I wonder, why.
And the cleanest.
And the cleanest. And so I wonder why, now that enough United States citizens have actually considered and go to conventions about living in Dubai and starting their businesses in Dubai.
There's a lot of people living in Dubai already from America.
Especially, yes,
black
from
folks,
the U.S.
Especially black folks.
So this fear tactic, oftentimes that's created, is really a business situation. So it's like, follow the money.
Yeah.
Right? Follow the money. I, for one, am like, okay, when disaster hits in certain areas, what do people do? Right? When Puerto Rico got hit with the storm, the hurricane, you had people that went over to Puerto Rico in drones to purchase land, to start building.
Exactly.
Right? And so unfortunately, the people that lived there were the ones that got hit with disaster, and they're the natives to the land.
And a lot of them left and came to the U.S.
A lot of them left and came here.
Yeah.
And now their land is open to investors
their land
to be able to go and get.
Their land was so cheap and they bought it. Now, question on Dubai. Do their wealth come from oil?
I believe so.
Is it oil?
I believe
Because
it's
I know
oil.
they got a lot of gold also.
Yeah, I know Dubai. Yeah, maybe it's oil. And the other country over there, Kuwait, they're a very rich oil country. If you remember back in the early 80s, Russia invaded Kuwait, and that's why it was a big deal, because Kuwait has so much oil for a small country.
Yeah, I recognize Kuwait, but in terms of Dubai with the oil, I don't
well, what's happening
that.
right now in the Middle East?
I don't know.
Because the United States and Israel decided to bomb Iran.
Right.
Iran is shooting missiles at I believe it's the United
Emirates.
Yes, they're being bombed. Dubai's being bombed. I believe Lebanon. There's about 5 or 6 countries that Iran is retaliating against because U.S. have air bases on those countries, in those countries. So this is having just a global effect. So, I mean, having you here talking about finances, this is good knowledge, because people will panic and start pulling their money out of the market.
Right.
Don't do it. Don't do it, because just like investing in stock, right? When the stock goes down, when there's a problem with a corporation, then rich people go in and they buy stock, right?
Right.
We have to consider countries as incorporated businesses. The United States is an incorporated business. All these other countries, they're following suit. That's why behind closed doors, you're going to see Trump with all of these other, royals and other presidents. And we think that it's just about the people. And unfortunately, it's not.
It's really not. I just asked a question to several people last week or a couple of weeks ago. So we were giving money to Israel to defend against Palestine. Well, Hamas. Israel dropped bombs, blew up Palestine. We just gave Palestine. We're going to invest $200 billion in Palestine to build it back up.
$1 trillion.
You know what? You're probably right.
Yeah.
These numbers are coming out so fast, so sometimes you kind of get confused. But there's a lot of money going. So we gave money to Israel, who bombed Palestine. Now we're coming full circle to build it back up. I mean, where does that make sense at? But we're just saying, this is how it's done.
Yeah, that was the goal. Unfortunately, that was the goal, right? You break a country down, and then you've got the natives that run away from their land, so you cause a problem to solve the problem.
Right.
Only for the U.S. to go in and say, we're going to help you rebuild infrastructure. And here's the tricky part, right? When we talk about the trillions, because I saw that, and I'm like, where's this money coming from? Well, it's coming from the fact that the dollar and everything is being converted into cryptocurrency.
And then you'll have U.S. businessmen go over to Palestine, build it back up, contractors, people making money. Now, question.
Hold that thought before we're going to come back to that, because our special guest is ready.
Okay.
But the crazy thing about those trillions of dollars, you think about all that money, right? And then you think about all the problems we got here in the U.S., man.
It can't be solved.
Can't be solved. And you're giving them $1 trillion?
Student loans.
Oh, my God.
Student loans, homelessness. We can go on and on.
They're not looking to solve our problems.
It's crazy.
No,
it's crazy.
We're in the way of corporate business.
Right. All right, folks. Want to welcome my special guest, the CEO of CF. Is it CFG? I'm sorry, man. Did I get it wrong?
TFG.
CFG. Yes. I'm sorry. Yeah. Hey, matter of fact, for those who don't know, you all actually know this guy. There used to be a radio station in Boston. It was here for a short time, Hot 97. But he also went over to the competition, right? If I'm not mistaken. Y'all know him as Chuck Dog. I don't know if y'all remember Chuck Dog a few years back. But I wanted to get him on the show because he's an expert when it comes to finances and putting your money in places to make your money work for you. Because as I said earlier, what many of us do is we work for the money instead of making it work for us. I'm hearing a lot of noise in the background. I don't know if that's you, Chuck, or is it someone on my end, but
I don't there's nothing going on in my background.
Okay.
Yeah.
All right. Mm-hmm. Okay. So let's talk about it, man. Let's start with
bring him up in here also.
Yeah. Actually, no, we won't be able to do that.
Okay.
Yeah, not with the mics up. Yeah, let's start with just some some basic things first, like life insurance. You got term life, you got whole life insurance, which I hear is a really good thing to invest into because you get a return on it. And life insurance we should all have anyways, especially now with as many folks that we all know that have been passing away in the past few weeks, never mind over the past few years at a record number, alarming number, in my opinion. So let's start there with the insurance policy.
Cool. All right. Well, tell me where you want me to start. You mean because there is levels to this, right? I mean, it just depends on the person and what they actually what their goals are, what is it they need. You know, maybe so they have a family, maybe they have a business, that kind of thing. But basically, the long and short of it is that number one, what you said. The reason why you brought me on the show and you were saying, okay, well, there's so many people that are dying without life insurance. Right. And in the US, about 1.2 million people per year die without life insurance, which is really crazy. Right. So why would you insure your cell phone? Why would you insure your car? You know, why would you insure all these other things and not insure your life? That doesn't make a lot of sense. Right. Especially when you have dependents and different people that are you know, maybe you run a business and you have a small business and you have, you know, 10 to 100 people in that business, for example. And they're all depending on you. They're all depending on the business to actually make money. Something happens with the owner of the business, and then all of a sudden everybody's out without a job. They have nothing because the person has not done the proper precautions or taken the proper precautions to make sure that they have coverage that they can take care of the people that they're leaving behind. So there's levels to the life insurance. First of all, there's term life insurance, which is like renting a property, right? So I'm sure Miss Boss Lady probably knows a lot about this stuff, but term life insurance is super cool because it's crazy cheap. You don't have to spend a lot of money on it.
What's cheap?
But term insurance.
I mean, how much when you say it's cheap?
Well, it depends on the person, their age, their location, where they're, that kind of thing. But you can. The thing is that it's really hard to say exactly what the price would be, but typically somewhere below $100 a month, depending on the person and their age, whether it's a woman or a man. It usually costs a little bit more for guys because actuaries tell us that men are going to pass away sooner. Yeah, we're going to pass away sooner than women would. But term life insurance is great to have if you don't have any life insurance, because you could just make sure that you're making those payments. And then if you by the time, like if somebody is like, let's just say they're 25 or 30 years old and they have a young family, right? So that term insurance is going to cover them for 10 years, 20 years, or 30 years. That's typically the amount of term that you're going to have. So once that term expires, it's like if you're renting a place, you're going to give the keys back to the landlord. You get no equity. There's nothing that's there. It's just you have the coverage and you're renting the coverage, for a certain period of time, right? But then there's the next level. You have term insurance with what they call living benefits. So let's just say, for example, I have a critical illness, I have a terminal illness, something like that happens in my life, and I don't want to expose all the things that I've saved and accumulated over the years, like a 401k or IRA, different things like that. That is at risk for exposure when you have a severe health risk that will cause you to lose, a lot of money, or have to pay, a lot of money in medical bills and different things like that. So the next level is having term with living benefits. Then you have term insurance with living benefits that you can convert to a whole life insurance policy or to an index universal life insurance policy. Different companies actually specialize in that, where you can actually say, okay, well, I have a certain amount of term. I want to rent to own. In a sense, right? I want to rent this term insurance for a certain period of time. And then at a later point in time, I can say, look, I want to flip a switch and I want to turn that into something that I own, which is whole life insurance or index universal life insurance, for example. Then you have whole life insurance, which is going to give you ownership. You're going to own that. Whole life is just going to cover you for your whole life. That's what I tell people. I'm like, look, if you want to talk about insurance and how it actually works, whole life insurance is going to cover you for your whole life, right? As long as you make the premium payments.
Okay.
Then you have index universal life insurance.
Now, I'm sorry. Let me stop you right there, because whole life. One of the things I hear about whole life, you can borrow from that. Am I right when I say that?
You can. Yeah, you can borrow from it. It's more, to me, it's more of a mid to long term play. in terms of like being able to borrow from it. So you can have they have a lot of different concepts. There are a lot of different concepts that exist as far as using whole life insurance to be able to leverage. For example, let's just say I have a whole life insurance policy and I've kept it for 10 years or more, right? I can actually take that whole life policy from that company and say, listen, I want to leverage this policy, and I want to take it to a bank and get a loan against the death benefit of that policy because I own the policy. I've actually put more money into the premiums than what has been matched by the insurance company, right? And I want to take that and I want to leverage that towards purchasing a home. A lot of people use that leverage to actually take the death benefit. Let's just say you have $500,000 of whole life insurance. I could take that to a bank. Me and Miss Boss Lady can walk up to the bank and say, look, I want to leverage this policy. And I want to have a loan against that policy because they know that they're guaranteed to get that money back if I was to pass away or get sick or get injured. You understand what I'm saying?
Yeah, you just schooled me. I never knew you could do that with a whole life policy, man. That you could use that as an asset when it comes to buying a house.
Can I interject for a minute, brother?
Yeah.
How you doing today?
I'm doing great. What's your name? Your name is not up on the.
My name's Richard. They call me Richard.
Yeah.
How you doing? Listen, everything that you just said is so crazy because what you just said, I found out about a little over 20 years ago. I actually have a whole life and a term life policy. And I learned this, the part about you're saying about the investment, you're protecting your family. I learned years ago that it was something you had to take out a policy was like 5 or 6 times your earning salary. I learned that years ago to protect your family. And over a 20-year period, I took out multiple policies. And like you said, the whole life, it builds cash value. And everything you're saying is so correct because I learned that from my financial advisor. And one of the things with term life, which do you propose for most people, the term life or the whole life? Because what you just said, most people, it can get a little confusing if they don't really understand it. I understand everything that you just said because I learned that, like I said, over 20 years ago. But sitting down talking to people, a lot of people just look at life insurance. That's all they look at.
Right, because originally, like we were programmed when we were younger, right, that people have life insurance and it's only going to pay your family when you die, right?
Exactly. My mother was like that. She had insurance on everybody in the family. It was just enough to bury them. And that's just how my mother, being a Southern black lady, that's how she thought about life insurance. But now what I learned, life insurance is actually build generational wealth and leave your family something behind. I mean, unfortunately, as Black Americans, we weren't taught that, but that's something I learned over 20 years ago, that you set your family up because we don't want to accept it, but we're all going to die. I think as Afro-Americans, we don't look at life insurance like that because nobody wants to think about dying. But that's how you create generational wealth for your kids and your grandkids.
And as Chuck said earlier, you're going to pay for insurance on your phone. You're going to pay for your Verizon bill. You pay all these other bills, but you don't take time to pay into a life insurance policy. Like you said, Rich, it's a part of building generational wealth.
Most definitely. I'm actually trying to convince my daughter right now. She's 39. I'm 63. I mean,
man, you do not look old enough to have a 39-year-old daughter. That's for sure.
Hey, yeah, I do, man. I'm 63 myself. Hey, don't let Goose fool you.
That's why we don't get insurance because we know that black don't crack.
Hey, I'm gonna expose Goose. We grew up together. Don't let that baby face fool you over there.
We just think I ain't gonna never die. Like black don't crack.
Don't let Goose fool you. That baby face he carrying around.
Right.
But honestly, I've been trying to convince my daughter. I'm in good health. I've been trying to tell her to buy a life insurance policy on me. It's an investment for her. Right. I told her it will be an investment and it's non-taxable. That's what people don't look at either. Life insurance, they can't tax.
That's right.
So
it comes back tax-free to your beneficiaries.
So I told my daughter find the most expensive policy she could find. If it costs her $200 or $300 a month, she's gonna make more money off that than putting in probably investments. I told her, I said, eventually I'm gonna pass away, and you know what? Just don't knock me off.
Yeah, and
Yeah, right.
I'm gonna say one more thing. Then I'm gonna let you. Can you continue, Chuck?
Yeah, sure, no problem.
The last thing you want to do, and I'm not knocking anybody that does this, but you don't want the burden of having to do a GoFundMe. You don't want that.
Yes.
That part.
You don't want the burden of that. And again, I'm not knocking anyone that you do what you got to do, but it could be a lot easier if you just had a simple life insurance policy that's very cheap.
And I know you want him to continue, but for all the listeners out there, you know, when people talk about life insurance policies, they're starting to have the conversations around 30. The fact is, if you have children and you, for some reason, don't feel like you want to put a life insurance policy on yourself, do a whole life insurance policy at least. And I know Chuck has more to talk about, more options in terms of life insurance, but at least for your children, put a whole life insurance policy on them, because as they grow, they're sitting back. The life insurance policy is very inexpensive.
Yes.
You can literally afford it. It's like a cell phone bill. I have 3 children and 3 kids, life insurance ever since my youngest was like maybe 7 years old. And it's less than my cell phone bill.
Yes, it is.
And as these kids get older, the whole life insurance policy starts to build its cash value.
Yes. No, you're definitely right about that.
And if you got a kid that's in the streets, come on, man.
That part.
Come on.
That part. People got to really think about their kids.
And one quick question. If you have a large life insurance on yourself and you have young kids, you could actually put it in a trust
100%.
where they can't touch it till they're a certain age.
100%.
So there's a lot of ways. I mean, this conversation is great having with both of you guys right now, because this is stuff that we need to learn.
All right, let's let Chuck continue here, because I know you got a lot of stuff here.
Yeah.
Oh man, it's all good. I mean, I'm just enjoying the conversations, laid back conversations, just about things that really are important in life. And so, you know, and just to piggyback off of the rest of the conversation that's you know, before I'm talking right now, is that it is really super important. And then at the end of the day, on every single illustration that I show a client, I show them that this is going to pay for itself, right? How often have you had any investment that you can think of that would give you, if you're paying a premium of, you know, I don't know, $50 a month, right? You're paying a premium of $50 a month, but then you automatically have $500,000 to your name, added to your name. You don't have it. There's nothing else that's like that. You know, so you're putting a small premium down for protection to make sure that you're protecting your family, that you're protecting yourself. You're protecting yourself whether you live, whether you die, whether you get sick or injured long term. You're protecting your finances. You have the opportunity if you decide that you want to be able to put the money into it. Because, for example, my cell phone bill for my wife, myself, my three kids, or 3 kids that we have on that bill, it's $320 a month, right? So, I mean, how stupid is that? To have a cell phone bill that's $320 a month, and then you don't think that the value of your life is more than $50 or $100 a month to put,
you know what,
into insurance.
I like how you put that, man.
Yeah.
And it's really that simple. You know?
It's really very simple, but there's also requirements and criteria that people have to meet in terms of being able to get life insurance. So your health needs to be pretty good. I mean, you know, in terms of, have you had any pre-existing conditions? You know, because the more that you've had to go on in your life, in your health life, right? Because your health is your wealth. That's just the reality of it. Your health is your wealth. If you're not in good health, then you don't have access to certain things, and then you're forced to have to go and do traditional investments, right? Because that's not based on your health. Life insurance, health insurance, that's all based on your health, where you're located, what your age is, because we're not getting younger every day, right? So the older that we get, the more it costs for us to actually do it.
Yeah,
if
because
we're doing
risk involved, right?
Right, because there is more risk involved, because every day that we live, you know, we're closer to dying.
Right.
Exactly.
You know, that's just the reality of it, right? So if you think about it in those sense of the terms, that's what actually helps people to form a sense of immediacy to get this done for themselves, right? Because they're like, okay, it's gonna cost me more if I'm using life insurance for a retirement plan because they have things that are, it's called a LIRP, alert, life insurance retirement planning, because people have gotten to the point where they're working more jobs over the years. Like when our grandparents and our parents were working, they had a pension. They worked a job for 25, 30, 40, 50 years. They retired, they got the gold watch, they got the keychain and the coffee mug. See you later. Go ahead. We're gonna pay for you to live for the rest of your life until you pass away. That does not really exist nowadays as much as it did back in the day with our parents and our grandparents. So people said, well, listen, I need to figure out how to do my own IRA or my own 401k, that kind of thing, or whatever. Start setting aside money and saving that money for a long-term strategy that's going to help me and my family to more than survive, but to thrive and to leave generational wealth, right? Term insurance doesn't typically do that because over 90% of the people that have term insurance outlive their insurance because of medical, upgrades. People living longer, and they have a lot of science and medicine has really elevated to a whole nother level that are keeping people living too long, right? So what if you die too soon, you get sick or injured permanently, or if you live too long and you outlive all of your finances in retirement? Because nowadays people are living in retirement 25 to 30 years in retirement. After they're done, they say, bye-bye, I'm not working anymore. I want to at least have the option to work or not.
Well,
Right?
I don't know if those numbers are, here in Boston, people have been dying every week, man. No, I'm serious.
Yeah.
Folks dying young, 40s and 50s,
Yep.
So
Yep.
yeah, I don't know if those numbers are involved, but
Well, I mean, what I think is, and what my intuition is telling me is that a lot of it has to do with health insurance and people not being able to afford health insurance, right? So then they don't want to go to their doctor. They don't know that something's wrong with them, and then they're passing away too soon.
And not willing to live a healthier lifestyle. Like if y'all ain't gonna pay for health insurance, then at least start living a healthier lifestyle.
But I gotta say this, and this is a whole nother topic, a whole nother subject. But in defense of how people are eating, it doesn't help that all the toxins they got in the food now, all the bio and the stuff that causes cancer. That's a whole nother show we're gonna do real soon. We're gonna talk about the food some more because the food is terrible, man.
And people can grow their own, but there are options. I don't want to give anybody an excuse out here because, it takes extra time to actually prepare your food and cook at home. It really does. And so there's the fast food options because we as human beings, we as working individuals on a regular basis don't really put that time aside to meal prep, which I think is important, and we should be holding ourselves accountable to that. People can grow some of their own foods within an apartment. I've seen people growing their own herbs to be able to add to, the meats. I don't eat red meat anymore, but knowing how to balance your food between alkaline food and acidic food, even knowing the knowledge behind that. But I did kind of want to piggyback off of Gooseby because I'm writing down some of the things you're talking about. I know you talked about term with living benefits. You talked about whole life insurance, but you haven't touched base on universal yet.
Okay. So yeah, I definitely will do that. So like I said, there's levels to it, right? So in that term insurance category, right, where you're renting the insurance, remember that's like renting an apartment. And at the end of that, you're turning in the keys and you're saying, hey, thank you very much. I appreciate everything. If you have something that goes wrong in the house, typically, I guess a lot of these landlords now are saying anything that's above $300 that they'll take care of it. Anything less than $300, then you have to take care of it, right? So it's you don't. But at the end of the day, you don't get anything back from that, right?
Right.
It's just like if you were putting insurance on your cell phone or your car. Typically, you're not getting anything back from that. You still have to pay a deductible. You still have to do a lot of other things. So shifting over to the next category, which is what we're addressing as far as whole life insurance. Whole life insurance comes with what they call dividends, right? So you got dividends that are actually coming from the company. You're saying, okay, look, I have this $100. We're going to use that number because that's a really low number when it comes down to actually building generational wealth. But let's just, because it's an easy number to use, we'll use that. So $100 a month that you're putting into a whole life policy, you're gonna typically receive about 5% compounded interest. That's on average between, you know, the companies that are offering that. Yeah, your New York Lifes, your Northwestern Mutuals, you know, your Mass Mutual. Those are whole life insurance companies. So they're going to give you about 5% back on your money compounded. Then when you step up to index universal life insurance, that's the next level up, right? So now we're leveraging the stock market where actually index universal life insurance mirrors the stock market. It returns to you on an annual basis, right? Because the stock market will actually give you daily or quarterly or monthly dividends or whatever that would be. But remember, those are not tax free. You have to pay taxes on that money because it's income that's coming into you, right?
Do you recommend that?
I recommend it. Yes, I definitely do. But I think that index universal life insurance is what we call a safe bucket of money, right? That you're putting money, you're dumping money into this, right? And into
Did
this
you say
particular
faith or
policy.
safe?
Safe, SAFE,
Oh,
like a safe
safe.
bucket,
Okay.
right?
Okay.
Where you're never gonna lose your money. The principal is always protected. There's basically with a lot of companies they have a 2% floor, which means that if the stock market went below 2%, then you still would not lose your principal and you would gain 2% interest compounded on that particular policy. But in index universal life insurance, that's typically picking up where whole life is left off. So whole life is right around 5 to 6% interest compounded. And then the next step is index universal life that's going to pick up where whole life left off at 6% and carry you all the way through 12% typically. Sometimes we're seeing like 12%, and in different companies, we're seeing that there's no caps at all. So if the stock market is doing really, really well that year, then you're going to get credited that 20 or 30%, depending on the company that we're actually working with that doesn't have a cap on their portfolio.
Right. Now, there's some folks that borrow. I know an individual, anytime he needs something that's a substantial amount, like he'll borrow from his whole life and he'll go buy a car in cash,
Yeah.
pay
Yep.
himself back. And he does, if he needs work on the house, he does the same thing.
Yep. It's
Yeah.
called infinite banking, right? So infinite banking is that concept where you borrow from yourself. So like, let's just say, for example, Goose, you're going to a car lot and you want to pick up a car, right? What's the interest rate that you would typically, do you have like an idea, or do any of you have an idea of what like a typical interest rate would be for a new car?
Right now, depending on your
23?
credit,
6%, 7%.
no, you could pay if you have good credit, you can get 7.9, 6.9 right now. If your
Okay.
credit is bad, you could pay 20%.
Yeah, I
Right,
think like
right.
the average person's paying around the high teens to
Yeah,
the
high
low
teens.
20s.
Yeah, you got to have
Yeah.
like an 800 credit score to really go in there now and get like a great interest rate. But if your credit score is like not great, they're getting you on the teens now.
Yeah.
Okay, cool. All right. So even at the baseline, that's 7.9%. If you had a whole life policy or index universal life insurance policy, because they operate very similarly in terms of like borrowing the money from the policy, you have a fixed amount that is usually right around 5% with these companies that you can borrow the money from yourself,
Right.
right? So remember, loans are never taxed. So if you're loaning the money to yourself, are you paying taxes on that or are you not?
No.
You're not paying taxes on that loan, right? So if you had to pay 5%, if you had a choice and you say, okay, look, I can go to a car dealership and on the low end, if my credit is amazing, if my financial credit, now we're talking about your health credit with life insurance. We're talking about your health credit score with health insurance, right? So you think about it, you say, okay, well, would I want to pay 5% and borrow the money from myself and I don't even have to pay it back if I don't want to? Or do I go to this other company that's going to charge me minimally 7.9%?
Right.
100% of the people are going to say, I would rather borrow the money from myself and pay 5% and not pay 7.9 or 8%, or 14%, or 20%, or
And it's tax
on
free
their
too.
on their credit cards. Their credit cards are paying 29.99%. Ridiculous amounts of money that they're paying, right, on their. So why not have a strategy that will put you in a much better place And if you can borrow the money from yourself, but then you don't even have to pay it back if you don't want to. It's just going to be subtracted from your death benefit. So if you have 500,000 of whole life insurance or 500,000 of index universal life insurance, you're paying insurance costs, which are a lot less down the road than if you have a managed account with Merrill Lynch or, with some other investment company, right? You're paying 1 to 2% on your money every single year, and these people are holding your money for over 20 years, 30 years that these companies are holding your investment funds, right? So if you can actually have something to pay for itself over time, that you can borrow from it, you can leverage it. Why would you not want to do that?
Right.
Why would you not want to do that? So that's the whole point, is that often I'm taking policies that were started as whole life policies because whole life policies are great, but now they're building life insurance so much better than they did when it was 20 or 30 years ago, right? It's like the same car, if you think about it, like the like a Honda car, what's a classic Honda vehicle? A Civic or an Accord, right? So they built those cars. They were really great cars back in the day when we were in high school and in college or whatever it is. But they've customized those cars over time to be much better on gas, right? to have backup cameras, better suspensions. You're getting a lot more for a lot less than what we had to pay back in the day. Technically, if you compare apples to apples from that many years ago to now, they just made insurance so much better, so much more pliable, so much more.
I have a question for you.
Yeah.
So just so the listeners can understand, because term, we get it, rental. Whole is more of like ownership. And index universal life insurance is more like being an investor.
Correct.
So all the real estate people out there, they kind of get that piece. And then being able to borrow, you can't borrow from term. You can borrow from whole life insurance, but it takes longer to accumulate a good amount of money to borrow.
I mean, you have liquidity. You could borrow from it the same day, depending on what the strategy is. Because some people they're saying, okay, well, I want to dump hundreds of thousands of dollars a year into this plan. We're not talking about $100. We're talking about So then we're thinking about, how do we use this as a tax strategy to help people to pay less taxes so that they have more to leave for their families, right? So some people say, well, listen, I want to take this money after taxes. I have $100,000 that I want to stack into this policy for several years, right? I want to put this money into it. And then they have a goal that is going to allow them to be able to take the money out right away, because they've already paid their taxes on it. But the money is still going to continue to grow in that policy, even if they take a loan from it, which is really cool.
So the average person, right?
Yeah.
The average person that's maybe paying $150 a month on a whole life insurance policy, that's going to need to sit and season for some time before they can pull out a decent amount of money. Let's say, maybe $10,000 to be able to borrow. But with an index life insurance policy, and I guess I want to understand it and make sure that my listeners also understand.
Sure.
You're making one payment per month on your life insurance, but the payment is somehow split into two different buckets, one towards life insurance and one towards investing in the market.
Yes. Yes.
I like.
So yeah, that's a very good explanation. So let's just say someone is paying $100 a month, like you were talking about. So a portion of that is going to go towards the cost of the life insurance, and the rest of that is going towards the company itself has investments, right? That's how they grow their financial strength. That's how they grow. And what I mean by financial strength, there's Standard & Poor's, there's AM, Fitch, Fitch and AM Best, right? Those three companies are the ratings companies that say, I'm going to give this company an A grade or a B grade or a C grade because their financial strength is not as strong as other companies and things like that. So that's how we know that these companies have been doing this for a lot of them have been doing it for hundreds of years, and they've been giving really safe returns to their clients, even through the world wars, through different things like that, right? So that's the stability and financial security that people really want,
Yeah, I
right?
believe New York Life's actually been around since the 1800s.
Yeah,
Right,
yeah,
right.
they're
They've been around
probably
for a
one of
long
the oldest
time.
company. Yeah, New York Life. Yeah.
Yeah.
Yep.
Quick question:
Sure.
do you believe that insurance companies discriminate against minorities, Black Americans, when we go to take out large policy? Because I've heard that. I didn't have a problem with it. Maybe they looked at my work record and everything and my income, because they know they dive into this stuff when you're taking out big life insurance policies, like they check your health and everything. But do you believe they discriminate against certain minority groups when you want to take out large policies? How do you feel about that?
Black
I
people.
mean, I yeah, I mean minorities, black people, like
Living in the
I
hood,
Yep.
honestly,
streets.
yeah, if they're in the streets, and because they do their due diligence, the companies is what I mean is they do their due diligence to make sure that the what the risk is. How do they have a bad driving record? They pull your driving record. They pull your criminal background record. Because if you have a criminal history, then you're more likely to something is going to happen to you.
And
You're
they will
more
deny you. I know they will deny you. That's just like apartment insurance or house insurance. I've known people. Actually, it happened to me once. Someone came door to door. We took out apartment insurance, and about 6 months later, one of the big insurance companies, they canceled. And I'm like, why did you come door to door with your salesman? And we took out the apartment insurance, and they ended up canceling. We lived in Roxbury. It was kind of weird. That's when I first understood how insurance companies work. They looked at the risk, the area, but initially they took your money up front and you paid, and then I guess they probably looked at the area, and whoever their salesman was, he wrote the policy. But that's when I first understood life insurance. I've never personally had no problem, but I've known people that have had life insurance. They've been denied. And also, as you get older, being in your 60s, I think they do put you through blood tests, physicals through their doctors if you go right in to try to take out a large life insurance policy.
Yeah, they do. So they typically what we do with those kind of cases, those are what we call fully underwritten. So that means that I'm sending a nurse to your home or to your office to do a medical background check. So they you stand on a scale. It's just like a regular paramedical
Yeah.
that you would do, like a checkup, right? And then they draw your blood, they send it to a lab, make sure that your blood is clean, and then that's it. I mean, it's really not. It ends up costing the client a lot less money when
They actually take your weight into consideration also.
they take your weight. Yeah,
They
you
use
stand
that
on a
weight chart
scale.
that's really outdated. Yeah.
Yeah, well, I mean, this is the thing. So a lot of companies, depending on the company, they all have what they call underwriting guidelines. So all of them are different in terms of your height, your weight, that kind of stuff, right? But I've served a lot of minorities in our business, and I've never seen a problem with them being approved for life insurance if they check all the boxes, right?
Okay.
If their health is good. Well, so typically what I would do is I say, listen, let's just sit down and have a brief conversation. Because I'm an underwriter, so I have to ask medical questions. What are your medications? Are you on any medications? Have you had any pre-existing conditions such as cancer, heart attack, stroke, anything like that? And then I send that back to my back office, and I say, listen, this is the case. This is Chuck Tolbert. He's 50 years old. This is his address. How many medications that he's taking, or is he not on any medications? I happen to not be on any medications. My height and weight, so on and so forth. And then we find the company. So we're brokers, right? So we actually find the best fit for the client in terms of price and also in terms of their health conditions, because some companies are more lenient on diabetes type 2, or some of them are more lenient if you had a stroke or a heart attack, within a certain time frame, and that kind of thing. So it may end up costing the client a little bit more cash, but at the end of the day, they still have the coverage. But they also have what they call instant decision, right? So the instant decision is something that they just pull your medical records electronically, and I can open and close a case the same day. I can talk to Steve on the phone right then and there. We can do an application. I can find out the company that's going to be the best fit for his situation, and I can get him instantly covered. I mean, we work with people from that are school teachers, nurses, doctors, lawyers, truck drivers. Like we work with a lot of different people, and I've never seen any problems with them being taken care of. Is just depending on their specific health situation and the company's underwriting
But you
guidelines.
do
If that makes sense.
recommend most people get life insurance as young as possible. If you have a family and you're in your 30s, you want to get as much as possible when you're young, because as you get older, it becomes harder to get a larger policy. Is that correct?
It does, yeah. I mean, as the time goes by, I mean, unless you just have never had any health things that have been reported to your medical records, because the thing is this. Like for example, I see it all the time. Somebody says, "I'm super healthy. I'm great. That I have no problems." Then I ask them about their medications, and some of them are taking, for example, like metformin, and metformin is for diabetes, right? So
Yes.
if they're taking metformin, then that is a immediate red flag to pretty much every insurance company, right? But then there's workarounds and different things like that. But the point is that they think that they're healthy, but then they're not. They're
Yeah.
not as healthy
Yeah.
as they think they are,
Yeah.
right?
True.
Yep.
All right, so that's one way of building wealth, life insurance. And I like what you can do with whole life in the universal index. Um,
Mm-hmm.
what are some other ways that folks can build wealth? Again, man, my whole thing is we need to learn, instead of working for the money, we got to start making our money work for us. And to be honest, that's what rich folks do, man.
That's
A
right.
lot of these folks that live in these big houses, they didn't earn it by going to work. I mean, they're at work, that helps, right?
Mm-hmm.
That's a
Yep.
check. But a lot of it is through different types of investment, including real estate, stock market. And so what are some of the other ways that you can help folks in terms of building wealth besides insurance?
Well, I mean, basically the idea of it is to make sure that everybody is educated and that they understand that
Mm-hmm.
that what the possibilities are, even if they never apply it to their life, right? But
Mm-hmm.
the next step would be for people to get with a financial professional. They talk to me, talk to anyone that you can trust,
Mm-hmm.
and say, like, listen, based on the information that I'm giving to you, and the important questions that are being asked in the consultation that we have with clients. What are your goals? Like, what is it like if you're 25, then your goals are not going to be the same as if you're 40, right? They're not going to be the same as if you're 50 or if you're over 60, right? So there's different stages that people are going to go through. So you want to find out exactly what are their goals, like what are their goals 1 to 3 years. Like Gooseby, what's the goal that you have in the next 1 to 3 years?
I mean, to continue having my dollar work for me, to continue, I don't care if it's $1.
Mm-hmm.
That $1 better bring back a whole bunch of pennies. You know what I
Right.
mean? So,
Right.
so I mean, yeah, and I learned it later in life, but that's the goal from now until I can't do nothing. Just to make sure that every dollar I have, every dollar I receive, is going to work and better not come back, or we're gonna have a problem. You know what I'm saying? That's my attitude.
Right.
So,
Right.
and I
Okay.
think everybody should look at money just like that. There are people sitting on, I'll use a number. Let's say folks got $20,000. There folks that just got 20 G's just sitting in the bank, earning 0.00 whatever. You're getting nothing back for that money.
Right. Mm-hmm.
But there's so many ways where you could take that $20,000 and you can get monthly dividends. You can, invest in a whole life or index, universal. There's so many different things you could do to make that money work for you. And if you do it early in life, then when you hit your 30s and you hit your 40s and 50s, it's like clockwork. If you don't have a job, you may not need a job because your money's paying you. You know?
Right. Right.
I feel like, it's unfortunate that this information is not shared at a much younger age. And yeah, we, as a people, Black Americans, we need to turn this into regular table talk. I
Mhm.
follow this guy on Instagram, and he literally is sharing the jewels that the Jewish community is using to make sure that their culture maintains itself. So we need to
Mm-hmm.
have these as regular table talk
Mhm.
conversations. But when I was younger, right, first of all, we need more Black people that are explaining life insurance to others and to their family members. But when I was younger, asking that question, like, what are your future goals? I didn't have an answer to that. And I think a lot of people, because they don't have an answer to that, they don't move forward with life insurance, or they don't move forward
Right.
with investing, because
Yeah.
when you're in your 20s, late 20s even, it's like, okay, I'm just getting out of college, or I'm just going into college, or I've got a job that's stable, but I don't know what my goals are. And I feel like, and maybe this is wrong, but as a mom, I feel like there has to be some type of standard, like, all right, well, we'll put you here. Because when you get a job and they offer you a 401k, they put you into a standard conservative position,
They
because most
do.
people don't
Yep. You're
understand.
earning like 1 to 3%
Right.
annually
Most
on your
people don't
money, and
understand it. And
And I don't
yeah.
like
instead of going
401ks personally.
but instead of going aggressive, which at a younger age, if you've got a 401k, because people are like, oh, my job offers me a 401k, but they don't know anything about it. But they put them into a standard positioning based off of, you don't know nothing. We're going to make you conservative. And as you,
They
work for us, we're going to put your money
they
here.
All right,
walk.
let me chime in real quick. So that's a great thing that you brought up. So let's just say, like, because conservatively, what we mean by the conservatively is that these are in no risk investments, right? They're the portfolio that the 401k, how it's been built, has been very, very not aggressive, and so that people don't lose their principal. So they're going to earn between like 1 and 3% interest on that money. Now, when you think about it, 1 to 3%, there is levels to it, right? So we talked about it earlier. We said 1 to 3%. Then you have whole life insurance that's 5%. That's around 5%. But you can still have a 401k that's more aggressively put together, like the portfolio on that. But a lot of companies don't want to run the risk of losing their employees' money, right? So it makes a lot of sense to when you think about it in that manner. But if you were to take the bull by the horns in your own and say, I'm not leaving my financial fate to a company, right? I'm going to take the bull by the horns and figure it out for myself and do something for myself that I know that I know that with my eyes closed, I can make more than 1-3% interest on my own, right? But the thing is that having a 401k is great because it's usually a company match involved with that. So they're putting in money according to your income, and they're saying, okay, well, I'm gonna match this up to 3% or 6%, whatever the company does, right? But even with that being said, most of the people that I come across and are my more successful clients, they say, well, look, it's great that I have a 401k, but I'm going to take whatever the company is not matching me at, whatever I have above and beyond that I want to actually put into a fund that's going to help to grow over time. They could take the rest of that money and put that into a whole life policy or put that into the index universal life policy, right? If they know that this is not going to give them the outcome that they want later on down the road, they can still do that. So what we typically are talking about is someone putting in somewhere between 5% to 10% into an income generating asset like life insurance, right? And we're saying, okay, look, if you have that money and you're making your gross income is $50,000 for the average person, right? Let's just say for the average person is $50,000. 10% of $50,000 is what?
5,000.
It's 5,000. So if you take that 5,000 number and you divide that by 12, what's that number?
What? 20,
Less than 1,000.
less
Eight
than a
something.
thousand. Yeah. If you divided 5,000 by 12, you said.
Yeah, 5,000 by 12 months. Yep.
Oh, okay. You
Like
divide
8
that.
something.
Yeah, you're only talking about maybe what, somewhere around maybe what,
It's
$400.
416.
Yeah,
Four
400,
hundred and sixteen bucks. Yep.
$416 a month. Yeah.
Right. So for an IRA, the average IRA, you can put in, I think it's It was last year. It was 7,000.
Yeah,
It
it's
was
went up over the years. Yeah,
Yeah,
it's
it's
up
gone
over
up.
the
It's
years.
gone up this year. I just looked at it the other day, and I don't remember what the number is,
Now,
but
is that for a single person or is that for a married couple? Because I know
for
it differentiates depending on is you
yes,
a single or married couple.
right, yeah. So there it was it's last year. I know that was in 2025. It was 7,000. And then if you were age 50 and above, you could put in 8,000 per year.
Yeah.
Right? You could put in 8,000 per year. So the thing is though, is that with index universal life insurance and whole life insurance, you could put in a lot more. There is no cap on what you can put into it.
Now, a couple of questions. I make them real quick.
Sure.
That's a question I've always had because I've ever had an IRA, a Roth IRA. Why do they government cap off how much money you can invest? Suppose I'm a guy that I'm living in a homeless shelter. I'm making $100,000 a year. I'm living on the street. Just say I'm living out my car, but I make 100,000. Suppose I want to dump my whole salary into a Roth IRA. Why can't I do that? That's always been my biggest question.
I'll answer that.
They don't want you to get rich.
They don't want you to get rich.
But
especially
why is
you, Rich?
why is
That's
there a
funny.
restriction? I've asked that to financial advisors for years.
Yes.
Nobody can give me an answer. If I wanted to live out of my minivan, go to work every day, clean shaven, and take my whole salary and dump into a Roth IRA, why can't I do that?
Well, my question would be, well, why would you do that?
Because he wants to.
Because in 30 years, I want to have $4 or $5 million, with interest compound.
He's taking the bull by the horns.
It's a tax code. Because of the tax
shelter.
codes.
Right.
The tax
It's a tax-
codes, the tax codes that they've created, with that in mind is that's the limit in terms of what
But you're stopping me
the tax
from
code. The tax
creating
codes
wealth.
will allow you to do that, right?
You're stopping me from creating wealth.
Well, I mean, but there's a million other ways to do it.
I understand what you're saying, and I've ran into this before talking to financial advisors. But if I want to do the same thing and not put that money into a Roth IRA and just put it in the bank and save it and still live out of that minivan and throw all of my savings into the bank, I can do that.
Right.
Well, this is the thing. So, for example, even with the car that you drive, right? You could have a Ferrari or you could have a Pinto,
Yes.
and you still got to go the speed limit, right? Like you
Most
can't go past the speed limit because that's what the rules and what the rules mandate, that you cannot go above. It doesn't matter whether you have a Ferrari or whether you have
So the
a
answer
Honda
is
Accord.
control.
That's
They
what
want
it
to
is.
control.
That's what it is.
Yeah.
That's exactly right. Yeah, that's exactly right.
And that's
Yeah,
not
it's a
fair.
control.
That's
Yeah.
not fair to me as a working man. If that's how I want to do my money, and I like Roth. I've had a Roth IRA. I still have one. And me and Goose have had this conversation. Goose is not a big fan of Roth IRAs.
No, not that. I'm not a big fan of 401k.
401k.
Oh, 401k.
Yeah,
I'm sorry,
yeah,
401k.
the
Right,
Roths are way-
401. But
Mhm.
and I started one probably 25 years ago. At the time, I could only put 3,000 in. Over the years, it went up, and every time it went up, I contribute more to it. And the amount you're saying right now, I'm probably right at that amount per year. But I've always had a problem with that. Why am I penalized for trying to get wealthy?
Because it's their organization.
Exactly.
And they have the control,
And-
and they'll allow
and I
you to
understand-
make what they
And
will
they
allow
want
you
you
to.
But that's
Yeah, that matrix.
exclusively. That's the reason why I don't.
Stay in
Why
your
I don't
place,
do those.
okay?
Yeah. And honestly,
So what do you suggest, Chuck?
This is the reason why I don't. What I suggest is whole life insurance or index universal life insurance, and that's the reason why is because there is no limit in terms of what it is that you can put in, right? And it's the reason, and that's. I mean, I can set up IRAs, I can do all those things, but I mean, let's put it like this: the ones that has always been the most successful for the client and the best fit for the client has been if they're healthy and they have a good health profile is insurance.
yes.
And it's because of the fact that it's the fastest way to grow generational wealth. If that's the goal, if the goal is financial security, then it's the fastest way to get to financial security. Like we talked about earlier, you put in one premium and then all of a sudden you have all this access to a big death benefit that you can use while you're living if you have term with living benefits, or if you have whole life with living benefits, or index universal life with
How do you
living
feel
benefits.
about annuities? Like, for instance, if
Good question. I was going to ask you about those.
if
What
I
is an annuity?
okay, if I annuity basically is, say I've been investing in my Roth IRA or whatever, and all of a sudden I have $300,000, and when I'm 65, 66, I can either pull my money out my Roth IRA, because after 59 and a half, they're not taxing me on it. There's two type of Roth IRAs. He knows already. There's a traditional, you could put your money in before tax, and what they do, it lowers your income weekly, so you get a tax break at the end of the year. Or you could put your money in after tax, and you only pay on the interest, but after 59 and a half, you don't pay. I did the one where I put my money in after tax.
Right.
That way you can get your money out anytime you want without being taxed on it.
So that's
That's
a
right.
Roth IRA.
Yeah, tradition.
How does that relate to an annuity?
Well, annuity is, say I turned 65 or 67, whatever, 59 and a half. Say I got 300,000. If I want to take, say, 150,000 of that and buy an annuity through like his insurance, his company will sell. Most insurance companies will sell you an annuity. I get them the 150,000. What they do, they guarantee me a monthly payment the rest of my life. I could take a 15-year, 20-year annuity, or I could take a lifetime. Say
I'm impressed, man. I'm impressed, bro.
Oh yeah, man. Hey, man. Hey, I learned this over 25 years ago, man.
Yeah,
For beginners like me,
So,
I don't know
I'm gonna
that
tell
an
you right-
annuity has to do with life insurance.
No, well,
Wait,
no, you could buy an annuity right now. You could take
But from
100,
where?
a life insurance company,
Okay.
or any
Yeah,
type of finance company.
Let's talk
So-
about that, Chuck.
so
after,
what-
after you.
Yep. So
Yeah.
basically, if I got 150,000, say I'm 65, I'm getting my pension, I'm getting my Social Security, and now I want to take this 300 grand. I'm like, you know what? I want to take 150 grand of it. I'm gonna give it to a finance company, life insurance, whoever sell me an annuity. They could give me a 10-year annuity where they might want to pay me, say, $2,000 a month. They're taking my money and investing it also. So they're making money off my money, but they're gonna guarantee me $2,000 a month for 10 years. I might want to go 20 years and they give me $1,500 a month, or I might want to go lifetime. Give them 150,000, they give me $1,000 every month. If I do that, say for 25, 30 years, I make out. You see, so that's what annuity.
So an annuity is kind of like, and I guess this is again for any of the people that are beginners to this conversation and just want to.
It's a guaranteed income. You're buying yourself guaranteed
You're
income.
buying
That's
yourself
it.
guaranteed income.
Yes.
You're
And what does it
paying
cost?
into somebody else.
What you
making
say? What's
sure
the
you
cost,
get money
Steve?
monthly.
Yeah, what's the cost for it?
Well,
How does
you
that
can.
piece work?
The cost is basically you're buying. You're taking a chance. If you do a lifetime annuity, basically what happens is, if you die, your wife will get the money. If you do it for 15 years and you die 5 years in, your survivors get the other 10 years.
Yeah, but what does it cost?
Oh, whatever you can put different amounts in there.
So you put the money in. You
Yeah.
don't have to. So is there an interest for?
So let's just say, I want to piggyback on what
Have an annuity?
Rich is talking about. So
Yep.
you say, like, because he's on 100% on spot on. And as a matter of fact, we got a place for you over here, Rich, if you want to become a financial
Hey, listen,
professional.
I can sell ice to the Eskimos,
Hey,
man.
what's
Listen,
that
I
movie?
believe you.
Hey,
I
what's
believe
that?
you on that.
What part is
So-
that in Scarface? You got a job.
Yep. So, I mean, Gooseby, what you can do is, let's just say, for example, the part that was missing is what Rich was alluding to is say he worked his entire life. He works for a company, or he had a 401k, or he had a IRA that he wants to turn into a guaranteed income for life. That's what an annuity is. It's like you setting up a pension for yourself, because
Right.
remember we talked about earlier, pensions really don't exist on a high level like they used to, back in the day with our parents and grandparents, right? My mom is a
spot on
public.
about that, Chuck. Yeah, spot on. Not the inner seed, but let me tell you, I worked for the MBTA for 30 years. I've been retired for 9 years. I retired when I was 54. I had 400 grand in the MBTA pension fund. They matched it what I put in. When I left the T after 30 years, I could have took that 400 grand in my pocket. I didn't. They're paying me every month the rest of my life. That's based on the annuity. I took the annuity payment. From the T. Most people take the pension from the T. Nobody takes the lump sum. unless they say they're going to die in 6 months and they have no wife and kids, they'll take the money. But if you're leaving out of there, you take the survivor benefit if you're married. If you don't,
Right.
you get a higher pension. So that's
Mhm.
basically, break it down and make it simple. A pension is basically an annuity, but I took the payment the rest of my life instead of taking all of my money out of the MBTA pension fund.
Yep. Yep.
And
So,
instead of
because you can,
doing it for you, you can connect with someone like Chuck and
Yes.
say,
You,
I would like an
you
annuity.
can buy your own private
Here's
annuity.
X number of
Yes.
dollars,
Yes.
and they'll tell you
You can
how
buy your own
long
annuity.
they can
You
make
can,
payments to you.
yeah, whatever you want to stretch out the payments. Lifetime, the money goes down. It goes down. If you do years, 15, 20 years, you get a higher amount. Some people do it like that because they say if they're 65, well, I'm going to get it till I'm 80.
So I got a loophole question.
Yes.
Okay. Can you put the beneficiary of the annuity as a trust and have the infinite piece attached to it so that if you pass away, the annuity will still pay out into the trust?
Ask Chuck. I'm not, I don't know.
that is absolutely dope. And yes, you can.
Oh, good
Yeah.
question. Yes.
Okay.
Mhm.
Okay.
Yes.
Yep.
Now we talk.
Because annuities are not technically life insurance, but they have a life insurance component to it. Meaning, like what Rich was talking about and saying, okay, well, I can set up so that beneficiaries, it always comes with beneficiaries, right? So if I have an annuity, I have the 400,000 that I borrowed from Rich, and I created my annuity. If I decide that I want to leave money to my family, which would always be the case in that scenario, right? I mean, because I do have dependents and that kind of thing. And also to the Bible, I'm not a Bible thumper, but the Bible does say that a wise man does leave an inheritance to his children's children, right? So like that's what generational wealth, and the Bible talks about generational wealth to a very specific degree, right? So, but annuities are not insurance, but they do have. So, like for example, if I was setting up an annuity for you, I would not have to do a health screening for that. I would not have to send a nurse to you to do a paramedical for that.
Yeah,
It's
because that's your own money.
it's your own money, right? So you're funding it with your own money from a qualified retirement plan, right? So if you have a 401k or you have an IRA, you take the whatever is accumulated in that plan and you put it into an annuity, and it's going to say, okay, the annuity is like an ATM machine. It's really cool, right? It's like
Really starting to like annuities.
Yeah, no,
Yeah.
it's great for people
Yeah,
that
yeah.
want to guarantee themselves an income on top of their already retirement, whether it's a pension, Social Security. Some people do that. They do it for 10 years, 15 years, but the money's guaranteed every month.
So
Right.
what about, some people want to, well, okay, some people come out of incarceration
Yep.
and they can't get life insurance. And so, but maybe they were wrongfully incarcerated and now they've been awarded, $60,000, $70,000, $100,000. Can they take that money and put it into an annuity?
They can.
Yes.
They can. Yep.
And
Okay.
large
Y'all need to get
large payments. Actually, I have some friends that I've met over the years, and they work through companies. When people get $1 million payments, sometimes the lawyers will sit down with people with annuity companies and they will recommend that they put some money to live off, but they will also tell them to put some of the money away and take annuity payments the rest of their life, so they have
Right.
money the rest of their life.
Which is a smart thing to do. I
Right.
And keep
that way
in
you don't
mind,
dip in. You're not spending your money.
You're not
right.
especially if you don't have financial education.
That's
right.
right.
People have
Right.
all of this money. Even maybe a person passed away and the family, like when my grandparents died, right? Myself, my two brothers, we received our father's half because he had already passed away.
Yeah.
If someone had told me about, listen, girl, I know you don't have any financial education. Let's put this money into an annuity for you and your daughter, because I had my daughter at that time. And they're going to make sure that you get a monthly stipend. And when you get your job and everything in order, then you're going to create a pool and start feeding into that annuity also. Can
What
you
about
feed into an
lottery
annuity?
winners that go broke? Think of the lottery winners that go broke.
And that's the thing. That's why I'm glad we're talking about all this, because we have the habit of spend.
Because we've never had.
Right. And and that's
Well, not
fine. You
never,
have all that
but-
money, but if you're not making money off the money you have, then you're doing it wrong.
You're
Right.
definitely right.
Yeah.
Guys, it's funny we're talking about this. I've known $1 million scratch ticket winners. You usually get about $500,000 if you take the lump sum. I've known $1 million scratch ticket winners that went broke after 3 or 4 years.
I know a winner, the 3 point something million, and man, lost it just like that.
Now imagine
Gone.
if they had took half of that money and bought an annuity, you would have a lifetime income. But
Right.
but nobody trusts giving their money to a big corporation like that. But it's real. This is real. Annuities are real.
Yeah.
I'm living proof.
But that's what I tell people, Rich.
Yes.
Like, okay, well, you don't trust it. Okay, well, why don't you trust it? They've been, these particular companies, and all the companies that we have, about 70 to 100 companies that we work with through Tober Financial Group. So, and all those companies are all A-rated or above.
Listen,
right?
New York Life is not going broke. Okay, they've been like she said, they've been around since
They're not going broke.
1800s.
That's exactly
There
what
are
my
certain
point
companies,
is.
Fidelity, New York Life,
Charles
Schwab. You can keep on naming them. These companies are not going broke. They're all on the New York Stock Exchange for a reason.
You got to understand how money works for them. They are doing exactly what you should be doing.
Right.
But a lot of people aren't. And all they doing is making the money that they get work for them.
That's right.
They're earning interest on your money.
Yep.
And the unfortunate
That's the game.
mistrust around these particular products that are available to all people.
Well, we don't get educated at a young age about these
educated.
I didn't find out about this stuff till I was in my late 20s. I wish someone had told me about this when I was 18, 19 years old.
Right.
I ain't gonna lie. I blew so much money, man. I ran through so much money. It's pathetic.
Now, Chuck, what made you get into this field?
Great question. So I was, like Gooseby said, I started off as a DJ. I was an international touring DJ, and I worked in radio for several years.
Dog.
Yeah, Chuck Dog. Oh. So I was doing that, you know what I mean? And I love it. I love music. I produced a bunch of music for different television shows and video, commercials and movies and all stuff. And, I have music all around the world. And so then the pandemic came and things shut down, and I was thinking to myself, okay, well, I have, a family, I got, that kind of stuff. It gets hard to be in a club until 4, 5, 6 o'clock in the morning. And then you're thinking to yourself, okay, well, if this work stops, if something happens in my life where I'm in a club and there's a shooting or something happens or whatever, or either I get sick or I pass away too soon. If I stop DJing, the money stopping is not going to keep on coming in. And my dad was a surgeon. He was the first black surgeon at Henry Ford Hospital in Detroit, in Michigan, right? And he was also drafted to the Yankees when he was a young kid, but they weren't paying the black players very much money to so he said, listen, I'm gonna just go to medical school. He went to Howard Medical School, and he went to Wayne State University. And long story short of it is that when he passed away in 2004, he left generational wealth to our family. And I was highly impacted by that because I went into this office and I'm with my brother. I was living in Florida at the time when he passed away, and I walk into this office. It's his accountant, his team of financial advisors, and all this kind of stuff. And I'm meeting all these people for the first time. But I remember when I was sitting at the table that I had gone to play golf with my dad and his financial advisors, but I didn't know that they were his financial advisors, right? When I was a kid. And so they started telling us about all these things that my father did, and he owned apartment buildings, and he owned, homes, and he owned, he just did a lot of things in his life. And then I remember when I was a kid, I used to ask him, I'm like, did you work today, Dad? I was like a small kid. And he says, I work every day for you. And I'll never forget it. And so I realized that he had done all this planning and all these really great things that I had no idea about. When I was 12 years old, I was carrying golf bags. I was carrying golf bags, caddying and doing stuff. And he said, "You work really hard, son." He says, "You need to set up a Roth IRA." And he told me when I was 12. And he said, "I will do it like a company match." He says, "I want you to put in $1,000 a year. I'll put in the rest." And he did it. And what I'm saying is
That
that,
mic back for a second.
yep.
So your dad or your
Mhm.
dad's financial advisor suggested you as a 12-year-old to put money into a Roth IRA because you were working.
I was working. Yeah. So at the time, we didn't have to have when I went to Caddy, we didn't have to have a work permit to be able to work. So I could actually go, I could carry golf bags, make money and do stuff where I was a hustler since I can ever remember. But it was my dad. And my dad said, "Listen," he said, "you need to set up a Roth IRA." That's all he told me. But he said, "Give me $1,000 per year and I'll put in the rest. And then that's going to be your savings for retirement." But I'm 12 years old and I don't even understand what all this is all about.
And that's
Right.
only $20 a week.
Right. $20 a week, and so I just started putting two and two together, but having um that generational wealth allowed me to be able to really move about the cabin really easily in terms of me being in radio and music and all that stuff, because that's not a guaranteed income, right? It's not a guaranteed thing, but that allowed me some space to really be able to focus on being successful in that business. And so when the pandemic came, um, it shut down all the clubs and bars, and I was like, "Listen, I need to pray about this and think about what are my next steps, what is it that I'm going to do," because I felt like radio and television and all those different things were really going in a very different direction, and I needed to pivot and
But you
figure
had a
out.
good foundation already, though, from your
Yeah.
father.
100%.
Yeah, so that's what brought me into the business, and then also too, I had a really good friend of mine that I grew up with, and he was a blue collar worker. He went doing construction, comes home with his wife and his three kids. He grabs his chest, says, "Oh, I can't breathe, I can't breathe," and he died right in front of his family, dropped dead right there.
Oh,
Wow.
wow.
And they had to do a GoFundMe. At the time, I was not in this business. And so that actually helped me to really like say, okay, well, how can I make an impact before I die, before I go somewhere else off this planet? What can I do to help people to not have to do that,
Right.
to not have to do? And shamelessly, I will say that, and just being very, very honest, is that Black people have been the hardest people for me to help.
Most definitely.
They've been the hardest crowd, the toughest crowd to help to talk some sense into them, to get them to do something that's going to be that's going to last for a lifetime, right? It doesn't really make a lot of sense.
Listen,
And-
Chuck, you're
yeah.
100% about this, man. Listen,
And let's talk about it because
I'm not-
it's a problem.
listen, I'm not a financial advisor, but one of the things I try to tell people, younger people, even guys a little younger than me, what they should be doing to set up themselves for the future. And I also recommend go to the doctor and get checkups. That those finances and going to the doctor are our biggest things. Is hard to convince our people to do.
Health
And-
is wealth.
And with
Mhm.
where the food is today, you definitely got to eat better. I'm telling you now. The stuff that's in the food, you have to pay attention. And it's a problem. You got all kinds of bio stuff, unnatural stuff. And like we talked about a week ago, Rich, think about all the chicken we eat, right? We eat a lot of chicken, man. Where all these chickens coming from, man? We never have a chicken shortage,
And
but we eat a lot of chicken.
And the unfortunate, I guess comedy behind it is that Black people like fried chicken.
Yeah.
So the major corporations take that narrative that we've created and they say, okay, well, let's give them some more chicken.
Well, Popeyes commercial. Every time you turn around, there's a Popeyes Kentucky Fried Chicken commercial, and it's always on.
Chicken.
Yeah, exactly. When the NBA games are on, they're pushing Popeyes. But the main thing is out of this conversation, finances, and to me, and going to the doctor. Because if you're gonna eat bad, at least go to the doctor and find out what's going on with you.
Right.
And your finances is another thing, like Chuck's saying. Hey man, you got to get on top of those finances. Don't have people taking up a GoFundMe, leave your young teenage kids stranded with no type of money. And I don't personally, I don't think most people want to think about dying. That's why they don't want to sit down and have this uncomfortable conversation.
But you know what? And it's funny, I said this the other day on we have a new show on Urban Heat called Phipps Talk, Saturday mornings. Shameless plug because I'm on that also. But you know, people don't want to talk about creating a legacy for their death, but they ready to run out in these streets.
Yeah,
females are ready to run out in these streets over a man, more so than their kids sometimes. But people are ready to die for their kids. You got men out here that are gonna ride for their homies,
buy that $3,000 bag or that $4,000 bag.
You know, so it's unfortunate. And again, I don't want to give people an excuse, but no, you know, they shouldn't be not thinking about death.
Right.
Because if you can think about blowing a bag because your taxes came in,
or we're eating at some of the most expensive restaurants in town,
having to keep up
You
with
know what? This is the thing. When I do budgets with every single client that I talk to. I don't care if they have a lot of money, if they don't have that much money. I do a budget with them, and every single time, the highest expense outside of their rent or mortgage is what they're eating, what they're putting into their body, right?
Yes.
If people could put less in or eat less, right, and say, okay, look, or eat out less. I have the conversation in my own family all the time because we eat out, I think, way too much, right? But we do a lot of cooking at home, but we're still, you know, it's a big family. We got 6 people in our family, so you know everybody's kind of like living their own life and doing things. But you know, you think about it, and when you do that budget, they're spending the most money on eating, on clothes, you know, like different things like that actually subtract from your ability to, if they just employ a little bit of discipline and say, listen, I'm going to cut down and I'm going to stick to a budget on how much it is that I'm eating out every single month. I don't want to spend $1,500 or $2,000 a month eating out. I mean, like people are literally doing that, you know, like, you know, going out and they have a bigger family or they have, you know, more people. I mean, right now to eat, it's really like uncommon for me to go out and spend less than $50.
Well, Chuck, think about this. What about our teenagers? You look around the neighborhoods, right? And Steve can confirm this. Every time you see there's a DoorDash, Uber Eats driver pulling up, the teenage kids are coming out grabbing a bag of Chipotle's, McDonald's. That's a thing that bothers me with the young kids.
And it costs more to do it that way too, right?
Yeah,
they're spending
paying
more money to do that.
$12 for $30 worth of McDonald's. They do this 4 or 5 times a week. I see
just
the
to feed their
drivers.
hunger.
The drivers are double parked, and you're waiting behind a car, and you're like, what the hell is going on? It's a DoorDash or Uber Eats driver delivering food, and you see this young 18, 19, 20. I've seen kids as young as 15 years old ordering food on the phone, you know?
Mm-hmm.
And that's a thing we have to get out of. With the investing that you're talking about, we have the money. We have the finances.
We definitely have the money.
We have the money to invest. And I gave my daughter a blueprint a couple of years ago. I said, you know, if you save $20 a week, that's $1,000 a year. I said, if you do that for 10 years, that's $10,000. I said that's $30,000 over 30 years. I said, think about if you're investing that. I said, okay, maybe if you don't order out a couple of times a week, let's put that up to $50. That's $2,400, $2,600 a year. I said, after 30 years, that's $78,000. And if you got it invested, you might have 3 times more than that. Right. She was like, oh my God, I never thought about that. I said, well, it's $50. Think about that $50 a week.
Mm-hmm. And to piggyback off to that, what Rich just said, you're right, man. Folks have money. We have the money. There's guys sitting on a lot of paper and they're just sitting on it. They're not investing. It's just in the bank, you know, and it's not even that they don't know what to do with it. They just been so accustomed to what they're already doing with it. They're satisfied with that. And that's the problem. We got to change our way of thinking, man. You know?
And let's just give people some action steps, right? So you can go online to fidelity.com and you can create an account and you can, you can link your accounts and put money from your regular bank account into a Fidelity account. You can do that with Charles Schwab.
But before you do that, we gotta, hey, Chuck,
Yeah.
we gotta invest with Chuck because Chuck is giving all the info here.
Yeah. So,
listen,
but
Chuck,
this is
I'm
the
gonna
thing.
need
I
an
think that what
annuity,
she's saying,
please.
what you're
I
saying
need
is
an
on
annuity.
point, though. It is on point because but I think that the safer place to start is to do something like what we've been talking about this entire session. Is that okay? Well, what can I put my money into that's going to grow, and I don't have any risk of losing it, right? So I would start with that bucket first.
That's better than the
And,
bank.
yep, that's better than the bank, or that you're creating your own bank, right? Or do you say, well, I want to put my money into investments and then I risk losing the investment, or it's not going to grow, it's not guaranteed to grow, right? Because even in sports, like I know that I love Boston sports. I love sports period. And I think about it, and they say in every single sport, you may hear this, or maybe you haven't, but maybe you're hearing this for the first time, is that the best offense is always their defense,
That's
right?
right. Yes.
If the and what we do is we do defensive planning, right? Because offensive planning, it has to do with stocks, bonds, mutual funds, ETFs, Bitcoin. Like that's all like an aggressive offensive play, right? How to grow the money. Then you have the defensive planning that says, okay, I want to defend your position, and as long as we have a good defense, then our offense is always gonna be good, right? So we have at TFG, at Tober Financial Group, we have what's called a hybrid strategy that blends both of those two things, offensive planning and defensive planning, into a hybrid strategy that's going to help everybody win, right? So you're winning with growth. You're winning on the offensive side. You're winning on the defensive side, and then it's a long-term strategy for success, for tax mitigation, for providing things for your family, protecting your life and your income. We use a lot of the insurance also for business owners for golden handcuff plans, for employee compensation plans, different things like that. Say, okay, well, look, we're going to start an index universal life policy, or a whole life policy for an employee that's going to help them so that whenever they leave or they retire, that they have access to this cash. Because I show people all the time on illustrations for life insurance and say, look, this is going to give you a guaranteed income in retirement, of 45,000 a year, or 50,000 a year, or 100,000 a year. And a lot of times people are making more money in retirement when they deal with us than they were making when they were working in their working years.
Right.
Yeah,
Right.
because your retirement money is not being taxed. If you have annuity,
Right.
it's not taxed because the
Or
money's
or
already
life
been
insurance,
taxed.
or life insurance.
Or life insurance.
Yep. Mm-hmm. Yep.
And so I guess there's two questions, right? In terms of, again, just making sure that we're providing some action steps for people. But people are always worried about like what they got to pay, because it feels like an extra bill. And are you able to work? What's the least amount that someone can put in and you're able to work with them? That's one question, right?
Mhm.
What's the least amount that someone can do on a monthly payment? Because you have some people, 14 years old working at Walmart or working at Dunkin' Donuts, and they've got some money, but they don't have a lot of money. And they're like, you know what? I really like what you guys are talking about. My parents aren't doing it. Am I able to do it, or do I have to wait until I'm making X number of dollars to be able to do it? So what's the least amount that somebody can put into an account and effectively be able to start this strategy?
$25.
And because, right, here's the second question.
Mhm.
Tax season always comes around. So are people able to just pay an annual fee to kind of just get it out the way for the year,
Mm-hmm.
and use that strategy to help create this wealth?
Yes, and the answer to question number 2 is definitely a yes. You can do it. Every single year, if you have an idea of what your taxes are going to be, you can say, this is what I'm going to get back, and I want to plan to contribute this into this particular plan, right? So you can do that. The answer to your question number 1, It just depends on the income of the person and what can they do comfortably and reasonably over a long period of time, because this is, like I said, it's more of a long-term play,
Mm-hmm.
right? So if a person is, well, first of all, they have to be at least 18 years old to get to start a plan on their own, right? I always refer to the premiums that they're putting into the policy as a contribution and not as a payment,
Okay.
and so that they don't look at it as a bill, because it's not a bill. It's if you're putting money into whole life insurance or the index universal life insurance, that is not a bill. That is a contribution to you creating the life that you want, and me helping you to match those goals up with a particular product that's going to get you there,
Hey
right?
Chuck, one question. Have you ever used the phrase on them? Like you pay all your bills when your check come in. Have you ever told them, because they think of that as a bill when they're investing? You're really paying yourself if you think about it.
Yeah, it's exactly that, because
Yeah.
life insurance is going to pay for it, is going to pay for itself,
Let
right?
them know that they're paying themselves. Because a lot
Mm-hmm.
of people look at an investment as a bill, it's coming out of their check or whatever they're putting their money, but you're really putting money towards your own future.
Mm-hmm. Yeah, so I mean, with people who have that mentality that say, well, it's just another payment, I tend to not extend the conversation with them. Let's put it like that, because their
Yeah.
mindset is not in the spot that I can help them. If they're not open to the possibilities, then we can just have another conversation later on when the timing is right. When the timing is right for you, or you feel like, okay, well, yeah, I definitely
Well,
want to do this. I've been thinking about it.
most definitely investing is a mindset because, like I said, I've had conversations with people about the Roth IRA, and while I'm talking to them, they're sitting there scratching lottery tickets and they're telling me I'm not taking a chance investing my money. I said, you just scratched $50 worth of scratch tickets and you didn't
Facts.
win anything. You just took a chance,
Right.
you
Mm-hmm.
know, and that's there was several friends of mine that I had to kind of like show them, the comparison between putting money into a Roth IRA with the stock market and you sitting there scratching lottery tickets and you're coming out with nothing. So that's
Mm-hmm.
that's one of the things I've used with friends over the years.
Yeah, people just
Yeah.
don't know, man. They
See,
just
it's a timeline, Steve,
yep.
because if someone says, "Okay, I have something," and they started it when they're 20, like Rich's daughter, she started. Hopefully, she started early, like when he gave her the advice to do that. But if she starts it earlier, the time horizon for how long you have to put this money away is a lot longer. Where as opposed to if you're 40 or you're 50 and you're starting that and you're retiring in 15 years at 65,
Playing catch
right?
up.
You have to, yeah, you're playing catch up, so you have to put in a lot. You have to put in a lot more to answer Boss Lady's question, because she was saying like, okay, what's the minimum amount that I could put into it?
Mhm.
And the answer to that is you could put in as the least amount of money that you want to, but is that going to get you to the goal? Is if you're thinking about it, if you're making $50,000 a year, $100,000 a year, you want to make more, you want to make that or more in retirement, because we can definitely safely assume that taxes and inflation are going to be more in the future when you retire. Is that correct?
Right.
Mhm.
Okay, so why would you the question really would be is, what do you need to put in to get you from where you are to where you want to be?
Right.
If you know that there's going to come a day that you're not going to be able to work, or you're not going to be able to do the things that you're doing right now to earn an income, or the possibility is that if you want to actually retire, when I ask people, hey, at what age do you want to retire, they all say, I think that I'm going to end up working for the rest of my life. Okay,
And yeah,
so let's
not
back it up. Let's back that up then and say, okay, well, at what age would you like to have the option to say that I want to work or that I don't want to work? That's a different question, right? So then they say, okay, well, I think I would rather have the option to stop working at like 65. Okay, cool. Well, you're 50 now. That means you have 15 years to put a X amount of dollars every single month into this plan to help you to get to the goal. What is it that you can reasonably and comfortably do, where if you have a flat tire or something goes wrong and you know maybe you don't have an emergency fund, we try to set up so that you have an emergency fund so that you're not trying to tap into your life insurance, right? We strategically plan out your daily budgets and your monthly budgets and things like that to help you to understand that this is what you need to do in order for us to coach you from point A to point Z to get to the goal that you said that you wanted for yourself. If your activity does not match up with your goals, then okay, we can start off from wherever you want to start off. If you want to put in $100 a month, that's great. You know what I'm saying? It's better to get started than to not get started at all, right? But at the end of the day, is that really going to help you? But then you also have some different decisions that you can make along the way with the flexibility of index universal life insurance. Because I can say, well, yeah, I want to start off the plan with $100, but if I get extra tax money every year, then I can dump that in there and take advantage of the tax-free accumulation that happens with that policy, right? So you have some flexibility there. You could put in, lesser amount if you don't have the money that month. If you don't have $100, let's just say you only have 80. You could put in, there's a certain minimum that you could put in to keep the policy alive, so that if you have a bad month or a bad 6 months or a bad year, you're not at risk of losing your policy.
Now, give the folks your information, man, in case someone wants to follow up with any of this stuff.
Cool. So I created a personalized page for this show, for R&B talk for the listeners that are there. So you would just go to Tolbert, as T as in Tom, OL, B as in Bob, ERT. That's my last name, TolbertFinancialGroup.com/iHeart. And that will, allow you to actually put in your information, set up a consultation, and we can talk.
Say that again, Tolbert Financial Group?
Yeah, TolbertFinancialGroup.com/iHeart.
Are you saying Tolberts with an S?
TOLBERT, and then Financial Group. It's the same thing as on the headlines on the
.com/iHeart. You said?
Yes, TolbertFinancialGroup.com/iHeart.
You're not related to the former NBA player, are you? With the last name?
I don't think so. I know that my cousin Tony Tolbert used to play for University of Detroit in Michigan.
Yeah,
he was a pretty big player. Is that who you're referring to?
I thought I think he played in the, he played in the NBA a few years, I believe.
Yeah.
Exactly. That's who I was talking about. Yeah.
Tony Tolbert. Yeah, that's my cousin.
Yeah, he played in the NBA a couple of years. Yeah.
Yeah. So I mean, there's
that's
so
many
Rich
things.
Sports,
Man. That's why they call him Rich Sports.
Yeah.
He ain't gonna miss nothing, man.
He gonna pick it up. Yep. So. Yeah, man. So, I mean, I hope that I've been, informative, answered the questions that you guys had. Is there any more questions, or what questions do you have for me?
No, first of all, thank you for coming on, man, and giving us this important information, man. Definitely want to have you back sometime in the near future, man. And I mean, the information is scrolling across the screen. Tolbert Financial Group.com/iHeart if you want to get in touch with him, or if you want to follow up with any of those questions of anything we talked about, give him a holler, y'all.
And if you need an assistant, man, let me know, man.
Yeah, I'm looking to make some referral fees.
So this is the thing. I definitely will oblige that, and because we've built our business on referrals because we've done good work for people, and so our company is a sub company of AmeriLife. So AmeriLife is a huge $1 billion company.
Oh yeah, I've heard of you guys. Yeah.
Yeah. Mm-hmm. So like Tolbert Financial Group, we're just really happy to be here in the
you have an community office in Boston anywhere in particular?
We're a national practice. So we run, our agency is a nationwide agency. We're licensed in every state to help people, that's what I loved about insurance in terms of bringing on new agents and things like that, and helping them to make their businesses and their families and successful. So we're licensed to work in every state, which is really nice.
Great,
good stuff,
yeah,
man. Well, thank you again, man. We appreciate you, man. Some really good, solid information, man. I hope folks, was able to take notes and take it from there, man.
Yeah, thanks for having us, man. I appreciate it.
Thank you, man.
Yeah.
Thank you, man. We'll be in touch, man. We'll talk soon, man. Enjoy the rest of your day, and thank you once again, brother.
Absolutely. Peace.
No. All right. Yes, sir. Yeah, man.
That was great information, man.
I mean,
Very
solid
knowledgeable.
information, man. Because again, man, once again, like I said before, man, we have to get to the point where we are all at that point where we know how to make our money work for us. Because now, especially now with everything that's going on in the world, and
Right.
you know, things are tightening up, and it's going to get a lot tighter, especially with the AI and the jobs. Like, where's the money going to come from? If you have certain things set up, then you should be fine. You'll be able to manage.
The thing is, Steve, spreading this knowledge through our Black communities, that's the thing.
Right.
We have the money flowing. We're spending
We
it
have
in
the
other
money.
areas.
We're
But
spending it on clothes, sneakers,
fast food,
we fast food,
entertainment.
we at the club,
yes.
we getting our hair done, the weaves,
Yes,
and all kinds of
we
stuff.
definitely have
And
the
that's
money.
men and women.
Yeah, men and women, man.
Well,
we have the funds.
Well, Minister Louis Farrakhan have said many times the trillions of dollars that flow through our communities on a yearly basis. We're like the highest income community. Why do you think every ethnic group comes into our community to open up a business?
When it comes to companies being created and they're creating a product, who you think they looking at first?
That's
Right.
right.
You know?
Yeah, we spend a lot of cash. We spend liquid cash throughout our communities on a daily basis. And everything he was saying about investing, you start young in your early 20s and start putting $50 a week away. And now when you're 60, you're not playing catch up.
Right.
And before you know it, they said if you invested $10,000 in the stock market in 1981, you would have like $3 or $4 million today.
Right.
That
right.
was 45 years ago.
And you know, I might have these numbers wrong, but they're close. Putting $1,000 a year in a Roth IRA for what 10? I forget however long, but it turns into $3 million.
Yeah, over the course
time.
of 30 years. Yeah, if
Right.
you put it away. Yeah. Well, you know, Einstein always said compound interest is the greatest thing in the world, and that's something that we don't understand when they say compound interest. If you put $5,000 away in a year and it earned interest, the following year, now your money, your principal and your interest, you're making money on both.
Right.
Right.
So it's constantly compounding.
And guess what? That's what the banks are doing all day with our
Yes.
money. They're taking our money, it sits, they earn compound interest on that, and they loan it out for all kinds of stuff, insurance.
They
and
lower it out at 17% for a
CDs,
car loan, and
and
they're giving you 1% a year on
And-
your 100,000,
Right.
And which is only like $1,000.
and
they're
even with
loaning-
child support.
Yes,
Child support. A lot of people don't know, but you know, these mothers who are waiting on that, wondering why they haven't gotten a check. It's not that the father haven't sent the money in all the time. A lot of times they got it sitting in an account,
An
On it-
interest-bearing account.
An
Earning
interest-bearing account.
That's right.
and they're getting paid on your money. Yeah, they're
That's
gonna
right.
let it sit there for a little bit, man.
That's right.
They got to get something.
Yeah, it's coming through the bank.
You know,
You're right, Steve.
so-
This is also why these conversations are important, because whether you stay in that relationship or not, having a financial goal on, hey, if we split up, what is our plan going to be? I know people don't want to talk about that, right?
Right.
But when we do, like, if I had actually purchased a condo with my children's father when I first had a child or was able to, when we had broken up, we would have sold that and both of us made money. And people don't think in those terms, right? People don't think about, okay, well, you know, I'm with this person. We've been together for a few years. We make a good amount of money each. Why
Well,
don't we actually invest in a piece of property just based off of our situation right now? And if we split up, well, guess what? We're not going to move away from each other and be broke. We're going to move away, sell the property, and be able to go our separate ways. Or you guys will be able to stay together and grow based off of that asset. You might rent it out later on. You might sell it and buy a bigger piece of property because you've been investing in life insurance or in some stocks. And now you've got that 20 or actually 5 to 20% to get an investment property.
right.
We have to have these conversations
We have to.
and not just have the conversations, because, you know, beating a dead horse is nothing. We are actually saying, here's the water. You have the option to drink or not. I don't want to lead people to the water anymore. It's like, here's the water. You have the option to drink it or not. How do you get real estate? We'll tell you how to get real estate. You have the option of taking those action steps or not. I know people that are waiting for their credit to be in the right place to be able to purchase property. But when you're doing these things on your own without having a professional like Steve, like Rich, like Chuck, like myself, to actually say, okay, what your credit's not that bad. You know, you're trying to do this and figure this out on your own.
And it's not hard to fix your credit, even if it is bad.
Right.
You know, you just got to put the time and effort into it.
If you need life insurance and your medical might be something holding you back, you know, you're maybe a little overweight, you don't know if you have diabetes. Like Rich said, go and get an appointment. Check and see how you're doing. You might be able to get a really good life insurance policy that will help to build your wealth and help to build a bucket of money that if you ever need to stop working because of your health, you've got something to dip into to help with paying for your medical bills.
And these are the new habits that you have to get into. Get out of the old habits of following the people doing the wrong things, right? And follow people that, you know, you often talk, oh, he got it going on, or she got it going on. Oh, this dude got money, man. Well, how you think they got the money?
That's right.
You know,
it's a commitment. People don't realize it's a commitment.
It is commitment and discipline.
Yeah, commitment and discipline.
But it's an easy commitment and discipline when you look at what they're already doing,
right?
And what they're already doing to spend that money.
That's
you know what I mean? That money's flying. Like some people, man, they get a check and it's gone before they even get home.
Yep.
Yeah.
You know.
I mean, think about it. There's a marijuana dispensary on every corner now.
Yeah,
that's right.
Every time I
used
drive
to be
by
liquor
one,
stores. Now it's liquor and
I see people going into marijuana because dispensary, and not criticizing no one, but what are you spending a week on marijuana versus if you can cut that in half and invest some of that? There's a lot of ways you can take some of your money and invest it. If you're in your 30s and you're spending between fast food, Uber Eats, your marijuana dispensary bill, if you can somehow be disciplined and cut that in half, you realize you can accumulate money really quick.
And rich people do it all the time. They invest their money. They do it all the time. And it's all the things we just talked about a little while ago.
It's funny, right. Steve, you know? One more thing I wanted to get in with Chuck. Steve, I don't like the word retirement anymore. You know why?
You know what? Say what you're gonna say, and then I'm gonna.
You know why I don't like that word retirement? Yeah. It's a trick for us because Warren Buffett's not retired. Mm-hmm. Jeff Bezos not retired. Mm-hmm. Shaq's not retired. Mm-hmm. Shaq making money. I can go on and on. Charles Barkley not retired. They're retired from the NBA. Just because you retired from one segment, why should we stop our cash flow?
Right.
Because I turned 65, 67. Should I stop looking at income opportunities? That word retirement is trickery? It's trickery.
Yeah.
I realized that a few months ago. I was just laying down and it just came to me.
Because you're retired.
I said retired is trickery, but I still keep a cash flow going.
Mm-hmm.
It is.
It's trickery because people retire and they say, you know what, I'm just going to live off this amount of money. But if you got your good health and you can still move around, why not keep your income going?
That's right.
Now, let me say this. My friends always tease me, some of my boys, right? They always tease me and they say, man, Steve, sometimes they call me Tommy. They say Tommy ain't got no job. Oh. and they say that because, you know, I'm doing the radio thing. I DJ and I do the real estate. They consider the things I do
but they never see you actually working a job.
Not real jobs.
They see you not doing a 9-to-5.
Right. They don't see you working for someone else.
Right. Yes. So it's kind of like being like sometimes I say to people, you know, I feel like I'm retired because although I'm working, I'm not really working.
That's right.
Because I've learned how to make the money work for me.
That's right.
I pimp the money now.
That's right.
I didn't always do that.
That's right.
But my money goes to work. I wake up. Where's my dough?
Right.
What the hell? What?
Exactly.
Bring your ass.
As you get older, you have to create several different income streams for yourself.
Don't make me tear you
up. Know, hey, I'm not ashamed to say I retired from the T. I went and drove Uber 3-4 times a week.
Right.
And you know
did well off of that.
My Uber driver, I met an Uber driver that picked me up from the airport. and he was saying, he's doing it because he's bored. And he'd rather drive Uber. He wakes up early in the morning, so
Yes.
he gets that morning rush money.
Uber's the best thing for retirees to keep you moving.
Yeah,
I did Uber for 7 years. I'm doing other things now. I'm keeping it moving. I'm just not living off my retirement, because retirement is a tricky word. You get tricked into that because it will trick you into doing nothing.
And then if you do nothing, what happens? You get sick.
You get
and then
old.
all of a sudden,
you're not
that's
moving
it.
around. Exactly.
That's it.
Yeah, retirement is a tricky word they use on us. Think
I
about
agree with
all
you.
the wealthy people in their country. They don't use that word retirement.
Mhm.
Jeff Bezos,
They just
Warren Buffett,
adjust their style of living.
What's his name there? Mark Zuckerberg. You've never heard those guys say retirement.
Right.
And they're worth billions,
Mm-hmm.
a couple of $100 billion, the rich, wealthiest guys. You've never heard them use that word.
I feel like that should be kind of like a segment or even a panel that is had for anyone that's like 45 and up, actually sitting down and talking about retirement doesn't mean no longer employed.
Let's call it setting up your future for continuous income.
And how many people really do take advantage of retirement? Like, how many people enjoy retirement, right?
Yeah.
How many people retire that can say it's man, is it really up to what they say it's supposed to be? Are they really living long enough to enjoy it? You know what I mean?
You get a lot of people retire, Steve. They got enough money coming in. They go to Florida. They just chill, go to the beach all day, go to the golf course. I know guys personally.
I can't.
All they do is go to Florida. They play golf. That's what they do every day. Play golf, go to the beach. I know people that's permanently said, I'm not doing nothing.
And if their money's working for them,
but
in an annuity
they get
or
enough money
life
where they don't want to do nothing. I mean, it's great to have that. But when you get to that point where you don't have to do nothing, just live your life, that's a great feeling. But I mean, also you got to figure the billionaires, the multimillionaires, they're driven on a different level. It becomes a game to them making money.
Yeah.
Because they become so good at it, it's a challenge. Mm-hmm. Warren Buffett's what, 95 years old?
I'm not even sure.
The guy still drives a Volvo from like 30 years ago.
And I've adopted that mentality because just because you have money doesn't mean you need to spend that money. If something's not broke, don't fix it.
Exactly.
And that doesn't mean that you can't get something nicer. For the people out there, they're like, well, it's my money and I want to do and buy whatever I want to. Okay, cool. But you eventually hit a certain place in your life where you're kind of just being gluttonous. Mm-hmm. You're just buying to be buying.
Automobile is not really an asset to wealthy people.
It's not an asset at all.
It's really, for wealthy people, automobiles is not a big deal.
I mean, unless you stick it on Turo.
It's worth 10%. As soon as you drive it off the lot, 10% gone out the window.
Gone out the window.
Exactly. Out the window.
Unless you get a vehicle that you're going to put on a platform where somebody is going to rent it from you. That's right. And you can retire. Yeah. And the car becomes your employee.
I've met people that own about 6 or 7 vehicles and they're renting them out.
That's right.
Yeah, they own 6 or 7 vehicles. They rent them out.
But it's all about strategy. Yeah. I really like where you're saying just because you're retired doesn't mean you have to stop getting income. Because if you're making enough money and guess I've come to the place where I really want a housekeeper.
Yeah.
If you're making a decent amount of money and housekeepers are not even that expensive.
None of that stuff. Cleaners, chefs.
Right. You can set up a business where you're not actually running it, right? Someone else is running it, but you're getting the benefit of the income from it.
Right.
Yes. Yeah, that word retirement, they've used that in our society for a while. I think retirement sometimes can be a tricky word for working poor or middle class people, but when you take it into consideration, people with money. I mean, look at Shaq.
I feel like I'm always going to do something.
Yeah, exactly.
I'm not just going to not do nothing. I'm always going to be doing something. I cannot just sit around to be sitting around.
You see, know what I mean? Look at Tom Brady.
Right.
Fox TV making $40 million a year, Steve.
Yeah, making $40 million.
Selling everything under the sun. And
doing simple commercials. Doesn't he have a commercial with like
Pizza
Avis
Hut.
or Enterprise? You know what I mean? He's like, okay, that sounds like fun.
Delivering pizza and getting tackled at the door.
Yeah.
That's what I'm saying. He's making $40 million from Fox. He owns part of the Raiders. He's
Yeah, and he's going to continue.
Diversify.
And we're using retirement for him. He retired from football.
Right.
He didn't retire from making money.
And he didn't retire from life.
And all he's doing is
You know?
setting up generational wealth for his kids.
Right.
Now
You
think
know?
about it. Like, let's jump back to the car thing, right? And I was explaining. I did a workshop over the weekend with my union men and women, right? So I was talking about how when you buy a car, right? You're gonna finance it 9 times out of no one's really buying a car with cash unless you're buying a used car. But when you buy a house, when you buy a car, you're financing it. If the car costs $60,000, you're not paying
about right now in today's market, Steve.
With interest rates, you're gonna
$60,000 car,
80
and they're giving you
to maybe 100.
They're giving you 7-year loans now.
Right.
Yeah,
So
they're going 7 years because they want to you have to lower your payments.
So you
the
really
average brand new car is $700 a month.
right. So you're paying in the long term. You're not paying 60,000. You're paying about 80, maybe $90,000 for the car.
If you pay for it over that 7 years, and as you're paying for it, it's depreciating.
Right. And if you buy a house, you spend $500,000 on a house. Same thing.
30 years.
30 years.
What 1.5 maybe 1.3.
Whatever that number comes out to.
Yeah.
But it's a lot of money. So it's misleading, but
well, I found out a few years back watching the financial channels and reading stuff, listening to people. The American financial system runs off of credit.
Yes.
Without credit, this system will fail. They want you to finance cars. They want you to buy mortgages and houses. Banks are only in business because they loan out money.
I kind of disagree with that.
What, the financial system?
That the system would fail. The system is only going to fail because they're going to tell us it's going to fail.
Yeah.
But what's really going to happen is they're not going to get their pockets padded. That's because they're making money off of us.
Off of us. Yeah.
So we're not they're losing.
Yeah.
But in return, they're going to say, well, we can't do this or we can't do that anymore because that money's not coming in.
Well, if we're not buying cars and houses at the rate, what do, Steve? They lower the interest rates.
Exactly.
To pull us back in.
Right.
That's true.
They know how to pull us back in.
That's true.
When we're not purchasing the houses and cars, everything gets lowered because they have to control your money.
Yeah.
The interest rate, you see Donald Trump was fighting with the Fed chair.
Mm-hmm.
He wanted to get rid of the guy and put his guy in place.
Yeah.
But the president should not have that much power over the Federal Jerome Powell.
Yeah.
The president should not have power over the Federal Reserve. Never has. But he was trying to bully Jerome Powell.
Well,
but Jerome Powell didn't go for it.
Yeah, I think he was trying to bully him because he's under the Biden administration and he's trying to get things done.
Yes.
And Jerome's not on his side with that. Jerome's working for the Democrats.
But I still didn't want a president to have that much power over the Federal Reserve, Steve.
That's just for me, in my investments, it's a little different.
Yeah.
Yo, do what you got to do, man. You got to get Jerome out of here so I can put some more dollars in my
Jerome
pocket.
Powell, the Fed Reserve have always played with the interest rate depending on the economy. You know, after COVID, when everybody had money, they printed so much money, all of a sudden, we had too much cash in the system.
Yeah.
So the price of goods had went down. Now they pulled back. Interest rates went back up. People don't realize inflation works two ways.
Yo, it's a game.
There could be too much money or not enough money. And that's why they adjust the interest rate. This is stuff I'm just learning in the last maybe 10 years.
Listen, this is also why saving or having money in something that's going to give you a generous return on your dollars is important, because when those rates drop, you jump in.
Yes.
And you get that real estate. Now, I don't know if you guys, like Florida just took away taxes, property taxes.
Yes, I saw that.
So everybody is rushing into getting some real estate in Florida.
Yeah.
Because now what will that do? What that will do is raise their population as well and raise their voting power within that state. Maybe not against all the rest of the states.
And also what it does, they get retirees from the north going down there.
Money. And it brings money.
It brings money.
Well, well, they had to do something because the Florida market is bad right now.
Yeah.
When it comes to real estate, and a lot of those properties, especially during the hurricanes, a lot of those properties, the condo fees are just ridiculous. And
what about Detroit?
But here's the thing, and I just thought about this. If there's no taxes that have to be paid, and you can buy a piece of property, an investment piece of property in Florida, and you pay it off cash, now you're not paying anything else for it. You're not paying any taxes on it. And anything you make from it is nothing but 100% profit.
That's true. But remember, the next governor can easily change that.
That's true. You only got a short period of time,
Yeah.
but you jump in and you do things when
every
you can.
administration, you got to remember that where this government works.
Well, Trump is pushing that as well. He's pushing no taxes on
but
real
one
estate.
of the things, guys.
Imagine no taxes everywhere for the next 3 years.
But one of the things before we wrap up, and you hit it right on the nose. Imagine that you could live out of a van, save all your money, but you only could put $7,000 into a Roth IRA. But you can put it all in the bank, and they take your money and loan it out.
Right.
Like you said, controlling whether you get wealthy. They don't want the working man to get wealthy. Working people have gotten wealthy, but they try to throw up all the roadblocks. If I want to throw my whole check into a Roth IRA, why shouldn't I be able to? But they only allow you $7,000 a year.
Yeah.
He said Chuck said it was because of taxes. Yes and no. That's just
control.
It's a control thing.
Oh, it's all about control.
It's a control.
Everything, man.
But you can put it all in the bank though.
Yeah.
And they take your money
and they can
use
borrow
it.
and
they give you 1% interest.
Yeah.
Yeah. Give you $3 a year.
Because people don't want to accept it. There are people making $100,000 living out of their car.
Oh yeah.
They refuse to pay rent, mortgage, or anything. And they come to work every day and their co-workers don't even know this.
People
they shower
are
at the
getting
gym.
the RVs.
Yes, Steve,
people are getting the mobile homes that provide them a off-grid lifestyle. And the off-grid lifestyle, especially for a lot of the younger millennials, that is a lifestyle they're enjoying. They get to travel.
I've worked with someone that was living out of their car, making great money, and some people say this guy might have had like $500,000 when he retired in his 401k. He guy lived out of his car all the time. Went to like you said, Steve, had a gym membership, went to the gym, took showers. Guy came to work, clean, shaven. You would never know it. You looked in the back of his car, you just saw a bunch of bags. And people finally realized the guy's living out of his car. You know,
I remember my cousin used to sell sneakers out of he had one of those storage things.
The storage unit. Yeah.
And I remember going over there to buy the Timbs and whatever he had.
Was this on Mass Ave, Steve?
This was on Mass Ave.
Oh, I know where you're going with this.
Right.
I know where you're going.
And right where his storage was, there was people living out of the storage thing. Yeah.
Steve, I went to New York once. Went to buy some sneakers from some guys. These guys had television sets. They had couches in their storing unit in Manhattan. They pay their rent every month.
Yep.
They had electricity. Guys were living out their storage units.
Yeah.
And these guys were clean, shaven, dressed. That was their home.
Right.
They had TV set up, couches, everything, food, their little small refrigerators. People get very innovative, man.
Yeah. It didn't last long. Someone dropped a dime probably about 3-4 weeks later.
They closed that place, the one on Mass Ave.
Yeah, they closed it down.
They closed.
But they were living
down.
out of there. They had food plates and water. I looked at what this guy had because the guy was selling stuff out of his too.
Yeah.
And I was like, oh, okay. I was like, he's living in here.
Yeah, guys started doing that. That started in New York, actually. It might still be going on in New York. Because you know how those people that own the storage units, they don't give a damn. As long as they getting their rent.
Yeah.
Right. And you know, in some places, in some countries, that amount of space is not unusual.
That's right.
Right. You have hostels where people will go. There's a bathroom to be able to clean themselves. There's a shower to be able to wash up, and there's a bed.
Well, what about the tiny home thing that everybody's promoting across the country?
Yeah.
The small homes. People are building the smaller homes with just enough space. They realize they don't need the big houses anymore.
And here in Massachusetts, I believe they allow you can build now if you have enough area in the yard or wherever, you can build a small home or some type of small unit.
Yeah.
You can do that here in Massachusetts now. So
And there are cities in Massachusetts that already have opportunities for people that might have mobile homes or tiny homes. And back in the day, they used to call them trailer parks.
Yep.
But now they're tiny home communities.
Yes.
And so that is, again, a new wave that I remember
trailer
when I first got into real estate.
Well, people
I was
getting away
looking for
from
a tiny home.
Yeah, people are getting away from paying the high rent and the high cost of living, which Massachusetts is very high. I mean, so people are looking at different ways, and you're going to see this happen as things progress into the future, you know?
Right.
And
right.
why not? Down in Atlanta, and this is when we talk about Kujichagulia, one of the 7 elements of Kwanzaa and cooperative work in economics. There's 19 people that purchased, I believe it was like 400 acres of land, and they started building their own community. And when people can really trust each other,
Yes.
put their money together and say, listen, we don't need to live that lavish lifestyle. We don't have to keep up with the Joneses.
Right.
What Steve Harvey said, 7 good suits,
Yeah.
right? 7 good suits
What-
is all you need.
Doesn't it turn into like 50 or 60 different suits or
More
something?
than you need for the year in terms of outfits. And actually taking on that type of mentality, every one of them, 19, every single one of them was able to save up everything that they invested into the original idea.
Yeah,
Right.
most definitely.
It's
yeah,
just, it
most
makes
definitely.
sense. You know, we got to think different, live different, and be willing to trust the system.
Most
Because
definitely.
Black people need to stop acting like we can't trust the system. And no, it wasn't
Yes.
created for us, but
Of
that
course.
doesn't mean we can't benefit from it.
Oh, yeah, most definitely.
Right. Well, that's gonna do it for another Tuesday edition of R&B Talk. Shout out to Chuck Tolbert again. We want to thank you. We'll definitely have to have you back soon. And Boss Lady News, thank you for coming through.
Thank you for having
And
me.
yeah, good show, Rich Sports.
All right,
Another,
thanks, Steve.
another one in the can.
See you next
Um,
week.
All right, R&B Talk is next, y'all. Urban Heat,
Yeah.
98.1 FM, iHeartRadio.
Big old piece of your mind, and I'm not with it.
Well,
Hell no, baby, no, I ain't. We got a one of a kind. Strike me down if I'm lying. When you're down, girl, I'll pick you up. 1 minute, let this